You're watching Silver News Daily. Subscribe for more.
Unlike previous bull runs, the last one being from 2000 to 2010, which lasted a decade, I think this one probably has no ending until we have a new monetary system. So I think this is the final run, but it's not a final run where you can say it will hit a certain price. It keeps going until we don't have the currency which we use to buy gold anymore, and that effectively means that if you ask what the price will be, you'll be asking what the price will be in what will become eventually a defunct.
The final silver rush has begun, and most people still don't see it. While the mainstream media talks about rate cuts and stock rallies, the real story is unfolding beneath the surface. The dollar is collapsing, the global financial system is fracturing, and silver is breaking through decade-old resistance like a knife through paper. We've just seen silver hit $37.50, its highest level in 13 years. And that's just the warm-up. Because what's coming next isn't just another price move, it's the endgame. Fiat currencies are on their deathbed, trust in central banks is eroding by the day, and the demand for real assets is going parabolic. This isn't hype. It's math, history, and momentum all colliding at once. For decades, silver has been artificially suppressed, traded like paper, hoarded in vaults, and dumped onto the markets to keep prices tame. But now, that control is slipping. Vaults are being emptied, delivery requests are exploding, and investors are waking up to one simple truth. Silver isn't just a metal, it's a lifeboat. As the monetary reset approaches and gold prepares to reclaim its place in a new financial system, silver is poised to follow with a vengeance. The question isn't whether silver will hit $1,000. It's whether you'll be holding any when it does. Because by the time the world realizes what's happening, the shelves will be empty, the premiums will be sky high, and the opportunity to act will be gone. So how did we get here? And why is this the final silver bull run before everything changes? Let's break it down.
We've seen record central bank buying last year and also at the start of this year. We saw yesterday, as China brought out its numbers, that they've been cutting back on their gold purchases. I think it's the number of ounces they bought in the last 3 months has gone down from 160,000 to 90,000. Then I think it was 70,000. I think the latest one is 60,000 this month, in the month of May. Now, it could be that they're just showing price sensitivity. You know, it is at an all-time high as far as the Chinese are concerned. Or it could be that they are buying a lot and only telling us about a little bit they're buying to kind of store some silver under the table so as not to spook store some gold under the table so as not to spook the gold market so they can keep acquiring gold. If we do have another type of Bretton Woods agreement forced on us by some sort of currency meltdown, distrust of the currency, then whoever's got the most gold will be calling the shots. And you kind of want to have something in reserve, which you're not telling everybody about. So it could be that China's secretly acquiring gold, which we don't, I can't say they are or not. There's a lot of speculation they are. But right now, with the official numbers showing they're buying less gold, that's obviously making the market sit back and say, well, perhaps they're not going to buy any more, maybe they'll buy less. But I think gold remains well supported, nevertheless.
Silver didn't just break $37. It obliterated a psychological barrier that's held firm for over a decade. For 13 years, $35 acted like a concrete ceiling in the silver market. Every attempt to breach it was met with resistance, sell pressure, and manipulation. But this time, it smashed through with force, triggering algorithmic buy orders, sparking retail FOMO, and sending futures screaming to $37.71 in days. That kind of move isn't just bullish, it's a signal that something bigger is brewing. And make no mistake, this isn't just technical momentum. It's the result of systemic pressure that's been building silently beneath the surface. See, what separates this rally from every spike before it is the backdrop. In 2011, silver rallied off inflation fears. In 2020, it jumped on pandemic panic. But in 2025, we're dealing with something far more profound: currency degradation, debt spirals, and a complete loss of confidence in fiat. Central banks are cornered, printing to delay collapse, while investors are rotating out of risk and into reality. Gold is holding steady above $2,500, but silver, it's finally playing catch-up, and when silver catches up, it always does so violently. We're not talking about a 10% move. We're talking about potential doubling or tripling in weeks, not years. Analysts from Heraeus and CPM Group are already pointing to $40 and $45 as near-term targets. And if this bull run follows the historical pattern, like it did in 1980 or 2011, it could overshoot in spectacular fashion. Because silver doesn't just rise, it explodes. But for that explosion to be sustained, something else has to be true. There must be a real shortage. And that's exactly what we're seeing now.
The $35 level precisely. Within seconds, I'd got a message out on LinkedIn to all my followers. I've got about 15,000 followers saying silver has just broken the $35 level a few seconds ago. And this is the level that everybody has been watching because we've all been waiting for it to break $35. And when it does break $35, psychologically, everybody's turning bullish and buying it above the $35 level. And I wrote that about half an hour later, when it was at $35.50, I wrote it could get to $36 pretty quickly. And I think we did that the same day, if not the following day. And now we're pushing on $37. I'm seeing on the futures $37.01. I imagine it's slightly below that on the spot market. So yes, Stuart, what do I think is going to happen? I think we're in new territory. I think it will go a lot higher. I've been talking about the supply deficit of silver, where less silver has been mined for several years than is being used in industrial uses. The biggest increase of use in silver is from the electrical industry, where consumption of silver continues to rise rapidly because components in electricity are getting smaller and smaller. So that doesn't actually mean you need less silver. It actually means you need more silver, because the smaller the component, the more reliable you need the electricity conduction to be. And so silver is going into more and more products, micro products, to ensure that they're reliable. And in some cases they're putting gold, but that's another story. That's not affecting the gold price. So we're in a situation where that deficit of silver globally is set to continue rising as mine production continues falling, consumption continues rising, widening the deficit, and that difference has to be met from recycling. So whenever silver has a spike, the recyclers will always come out of the woodwork. You know, people with coin collections, bar collections, silver candlesticks, they will turn up and they will try and sell some, but usually there's a bit of a lag. So I think we probably do continue a little bit higher for a few days before we get to a pause. Will we touch $40? I think there's a probably about 30% chance that we could do it in the next couple of...
The silver supply chain is unraveling, and no one in the mainstream is talking about it. For years, production quietly declined while demand marched upward, and now the gap is no longer something you can paper over. In 2024, global mine output fell to just 820 million ounces, a 2% drop from the year before. At the same time, industrial and investor demand surged, creating a supply deficit of over 184 million ounces. In 2025, it's worse. We're already on track to hit a 200 million ounce shortfall, and that's before the market fully wakes up. This isn't some temporary bottleneck, it's a structural crisis. Major producers like Mexico are struggling with labor strikes and depleted ore grades. New mines aren't coming online fast enough. Permitting is a nightmare. Costs are rising, and ESG policies are choking off exploration. And while prices are finally starting to reflect this stress, the miners are still years behind where they need to be. That lag is deadly. When prices spike, recycling does pick up. It rose 10% in early 2025, but it can't come close to bridging a 200 million ounce gap. Recycling is reactive, but silver's shortfall is permanent. And here's the kicker. This is happening in plain sight. Reports from the Silver Institute, CPM Group, and Heraeus are screaming red flags, yet the market still pretends everything's fine. But the physical market knows better. Wholesalers are facing delays. Retailers are jacking up premiums. Investors trying to buy kilos or 100-ounce bars are being told to wait weeks. This isn't normal. It's a prelude. A market running dry isn't just bullish, it's explosive. Because when physical metal disappears and trust in paper contracts evaporates, the price doesn't just go up, it detonates. And nothing accelerates that detonation like overwhelming demand.
Well, you know, I'm very thankful for the very rapid 20% profit we got in the last week. That was quite nice. Platinum is in a similar situation to silver, and to some extent it's been dancing to the tune of silver recently. Now, it's been a much worse performer than silver long term, but what I have noticed is when silver spikes up, platinum tends to spike up on the same day. So clearly precious metal buyers are out there. And I read an article somewhere that in China, many buyers or some buyers are now turning to platinum as an alternative to gold because they feel that the gold price has risen so much. Platinum is a precious metal. It used to be double the price of gold. Now it's less than half the price of gold, but it's still a precious metal, and it's much, much rarer than gold. So the theory by the fans of platinum is that at some point it will see its day again and go back to its old norm of being, throughout all of history, it traded at a higher price than the price of gold. Well, we'll see if that happens, but certainly the move we've seen in the last few days of a 20-odd% rise in the price of platinum and almost no move in gold is kind of saying that it's trying to play a bit of catch-up now.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. Silver isn't just being hoarded, it's being consumed, and at a pace that the mining sector simply can't keep up with. We're witnessing a demand wave unlike anything in silver's modern history, and it's not being driven by speculative buying or Wall Street traders. It's being driven by the technologies powering the future. In 2024 alone, industrial demand hit 680 million ounces and percent year-over-year jump. Solar energy alone soaked up 210 million of those ounces, and that number is only expected to grow. Why? Because silver isn't optional in solar panels. It's essential. There's no substitute. If we want more green energy, we need more silver. And it doesn't stop at solar. Electric vehicles are rapidly scaling up, and every EV rolling off the production line requires silver in its battery systems, wiring, and electronic components. As EV production increases, so does silver demand, 10% higher in 2024 alone, and projections suggest this is just the beginning. Add to that the data center explosion powering artificial intelligence. High-performance computing infrastructure demands extreme conductivity and thermal efficiency, roles where silver outperforms every other metal. AI isn't just changing tech, it's quietly rewriting the commodity demand landscape. Even the telecom sector, especially 5G infrastructure, is becoming a major silver consumer. Every antenna, every microchip, every high-speed processor adds more pressure to a supply chain that's already under siege. Metals Focus now projects industrial demand to climb to 720 million ounces by 2026, and that could be a conservative estimate if global decarbonization targets hold firm. Here's the reality. Unlike gold, silver is being used up. It gets embedded into products, shipped out across the globe, and rarely recovered. When demand goes parabolic and the supply chain can't respond, a new price floor is born. And right now, that floor is rising faster than anyone expected. But what happens when the physical metal starts vanishing from the market entirely? We're already seeing the early signs. The exchanges are bleeding inventory, the paper promises are being tested, and the moment those promises break, the price action could enter uncharted territory.
And there's a new guy in charge, so we don't know that. But obviously, he could have been a big buyer of gold. Then who else could it be? Well, it could be some people have mooted that it might be the U.S. government itself acquiring gold, because perhaps the U.S. is going to go back onto a gold-backed dollar. Obviously, it can't be a gold-backed dollar at the present price. It would have to be a gold-backed dollar at a much higher. The price, the historical price was $42 that. It can't go back on $42 that, but it could go back at $3,500 or $4,000. But that doesn't mean to say it would go back onto a gold standard where everybody can turn in their dollars and get gold. They wouldn't have enough. So what would they have to do if they go back onto a gold standard? They'd have to go back onto a gold standard with a gold-backed dollar, whereby the ability to convert your existing dollars into gold-backed dollars is severely restricted. You might be able to convert $500 worth or $1,000 worth or $10,000 worth, but there's no way you could convert all the dollars which exist into a gold-backed dollar because there just isn't enough gold. But obviously, if they got more gold, it would mean that everybody could convert a little bit more old dollars to new dollars, and that would be some sort of currency reset. If they did that, of course, it would solve the national debt problem, because the debt would be left behind in a currency which is no longer allowed to be used in the economy, because they'd be forced to be able to pay their taxes in gold-backed dollars and shopping in gold-backed dollars and everything else. Now, I'm not saying that's going to happen. It's just a speculative theory. I mean, it could be we might get another currency in the form of central bank digital currencies. We might get ration coupons. That's a kind of another currency as well. We don't know what's coming, but at the end of the day, the fiat system that we're in today, where governments are piling debt upon debt, cannot continue indefinitely. And at some point, buyers are going to get indigestion, and it will. Then we have to see what happens. I mean, there's lots of theories about what happens next, and none of them are good for the holders of debt. None of them are good for holders of fiat.
The vaults are being drained, and fast. COMEX, once seen as the fortress of silver reserves, is now watching its shelves empty out at an unprecedented rate. From January to May 2025, delivery notices surged 650% year over year. That's over 62 million ounces taken off the exchange, physically delivered, not just paper trades. These aren't retail hobbyists making withdrawals. These are institutions, funds, and possibly even sovereign entities calling in their chips and demanding real metal. Why? Because they don't trust the system anymore. It's not just COMEX. The LBMA in London reported a 10% drop in its silver vault stocks during the first quarter of 2025. These are the two largest hubs for precious metals in the world, and both are hemorrhaging inventory at the same time. This is a huge red flag. When big money starts pulling physical, it signals one thing. They believe something is coming that paper contracts won't protect them from. Maybe it's a systemic breakdown. Maybe it's a short squeeze. Maybe it's the long-awaited currency reset. Whatever the reason, they're voting with their feet and their withdrawals. COMEX inventories have now plunged to just 280 million ounces, a 15-year low. At the same time, more and more delivery requests are being made each month. At this pace, we're approaching a scenario where the physical silver left on the exchange simply won't be enough to satisfy demand. And that's when the crisis begins. Because the entire silver market, like gold, is built on fractional reserves. If even a small percentage of holders demand delivery at once, the whole system freezes. And don't think the players making these moves are doing it blindly. Analysts like Jim Rickards believe this could be central bank or sovereign strategic buying, preparing for a world where currencies are backed by hard assets once again. Even J.P. Morgan, historically skeptical of silver rallies, admits that these outflows are significant and destabilizing. The warning signs are flashing everywhere, yet most investors are still asleep, trusting that the paper promises will be honored. But the smart money, they're taking the metal. And once enough people do the same, the supply squeeze becomes irreversible.
The delivery notices in them, I haven't got the latest numbers for June because I haven't looked at it yet, but the delivery months in the months of January, February, March, April, and May for gold and silver, actually, were massively ahead of the same months in the previous year. In fact, by mid-May, the number was 700% above mid-May, or not the whole of May, for the previous year. So that was the 100-ounce bars of gold, which are, if you like, $350,000 or $330,000 each. So somebody is taking huge deliveries of 100-ounce bars, which was never, that sort of level of delivery was never seen before, because traditionally COMEX was a futures market where people would get to the spot month and they'd roll their spot month into the future, whether they were long or short. For those institutions which were short, such as bullion banks and so forth, the way they would play the game would be to own spot gold, and sell it 3 months forward or 1 month forward, where you get a premium price, and then because they've got the gold at the spot level, as the gold they've sold on a forward basis reaches the spot month, they then resell it for 3 months forward, continuing collecting what's called the contango. The contango is the difference between the spot price and the future price. The future price generally trading at a premium to the spot. So that was the kind of market it was. But something changed this year, from about January this year, when people started to take, instead of rolling their contracts forward, they were taking delivery of that gold and removing it from the exchange. Why were they doing that? Was it that somewhere in the shadows there's a major buyer? And if so, who is it? We don't know. I mean, there's lots of speculation as to who it could be. And I can throw a few names around just saying it's speculation, but there is no plausible rumor as to who it could be. But it could be a foreign government who's acquiring gold because they don't have enough. Or let's say Mexico or China, for example. Well, probably not China, because China would buy through London, I think. But let's say Mexico or Canada. Maybe it's Berkshire Hathaway. I think that despite what everyone thinks that Warren Buffett thinks about gold, he does come from a background with his family, his parents' family, who were sort of very much in favor of gold and very much against America going off the gold standard. And of course, Warren Buffett has had his forays into silver. Now he's retired.
While silver captures headlines for its explosive upside, gold continues to steal the spotlight with central bank purchases, but the real play might be hiding in silver's shadow. Over the past 2 years, central banks have been hoarding gold at record levels, with China, Russia, Turkey, and several BRICS nations leading the charge. They're dumping U.S. treasuries, reducing dollar exposure, and quietly accumulating tangible assets. This isn't about diversification anymore. It's a coordinated exit from the fiat system. And while gold is their anchor, silver could be the stealth beneficiary in a monetary system reset. Here's why. Gold is the centerpiece of any sound money system, but silver has always ridden shotgun. Historically, silver was the people's money, the everyday transactional metal used alongside gold in every stable monetary regime. And if the world does move toward a multipolar currency backed by hard assets, as many believe is coming, silver's role could be reestablished in a way that few investors are prepared for. It's not just a hedge anymore, it becomes essential. But there's more going on here. As central banks absorb gold, they're shrinking the available supply for private investors. That scarcity forces capital to look elsewhere. And silver, with a market a fraction of gold's size, becomes the natural target. It's easier to accumulate in volume, more accessible for emerging markets, and still underowned relative to its potential. And while central banks are staying silent on silver, their actions are creating the conditions for a silver breakout. Currency debasement, loss of trust in the dollar, and the death of yield in bonds have all pushed the world toward physical assets. When that trend accelerates and gold becomes difficult, or politically dangerous to acquire, silver becomes the fallback, a fallback with a far greater potential upside. The monetary shift is already underway. Gold is being positioned as the new monetary standard. But silver is the one asset that can scale across both the elite and the everyday. If gold returns to official backing, silver may very well return to circulation. And when that happens, the demand spike could be unlike anything the market has ever seen. Because in a post-dollar world, silver isn't just a store of value. It's the future medium of exchange.
Japan has the advantage that most of its debt is owned domestically, and most of it is owned by the BOJ, the Bank of Japan. And the Bank of Japan, through its ongoing purchases of government bonds up until a few months ago, and everything changed a few months ago, up until a few months ago, was keeping the interest rate on all these government bonds at something like 0.1, 0.2%. Now, suddenly they've, over the last year or so, they've let it go a little bit. And on the 30-year bond, the interest rate is now over 2.5%. But it's still, although they have double the debt, they have half the interest rate, if you see what I mean. But it's going to turn into a problem for Japan now that the interest rate was, let's call it less than 0.5% for Japan for decades, and suddenly it's gone up. But when they were paying that little interest on double the debt, it's not the same thing as the U.S. government paying what they call 2.8%, but will very soon be 4-point-something%. On half the debt, they're paying twice. The USA is paying 4 times as much interest. So I know that people do this comparison with Japan and America, say Japan survived. Yes, they have. But how did they survive? By the BOJ buying the bonds. Now, what could happen in America is that we might get the Federal Reserve stepping in when interest rates start to go beyond a certain point. And when the Federal Reserve steps in, they will have to print money to buy those bonds. There's nowhere else the Federal Reserve can get the money to buy government bonds. So the liabilities side of the Federal Reserve's balance sheet is the money they printed, the electronic money, and the asset side is the bonds they bought. So when they're invited to or persuaded to or...
Retail investors are waking up, and they're charging into the silver market with a vengeance. For years, the silver narrative was dominated by institutions and industrial users, but now the small investors stepping in, and they're not nibbling. They're buying every ounce they can get their hands on. Bullion dealers are reporting record sales, delivery delays, and surging premiums across the board. 1 kilo bars, 100-ounce bricks, even government-minted coins. They're flying off the shelves. And this time, it's not a Reddit meme or a social media campaign. It's raw, grassroots fear. People are watching their savings get destroyed by inflation. They're seeing banks fail, debt ceilings explode, and central banks lose credibility. They're realizing that if they keep holding fiat, they're going to be left with worthless paper. And so they're doing what institutions have done quietly for years. They're buying physical silver. Only this time, it's happening in full view of the public. And here's what makes it even more explosive. The retail crowd moves fast. Unlike large institutions, retail investors don't wait for reports or committee meetings. They see a threat and they act. And that action is pushing demand through the roof. Even silver ETFs, which had seen stagnant inflows for years, are now recording aggressive accumulation. Mining stocks, especially juniors and explorers, are catching bids again as investors chase leverage on silver's upside. But most important of all, retail investors don't just buy, they evangelize. They talk, they post, they share their stories. And that creates a wave of awareness that spreads far beyond financial circles. The more people realize silver is both scarce and essential, the more they want to own it. And unlike Wall Street, the retail crowd doesn't trust paper. They want the real thing, physical metal in their hands, out of the system. This creates a feedback loop. Rising demand tightens supply, higher prices draw in more buyers, and scarcity becomes self-fulfilling. And once enough retail investors flood the market, the big institutions are forced to follow, not because they want to, but because the momentum becomes too powerful to ignore. When that happens, silver doesn't just rally, it ignites.
This is the consensus that they've thrown all austerity measures out of the window, and now it's spend, 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 as if they won the lottery, which obviously means the debt will go out of control faster than would have happened otherwise. But you only have to look, before all this happened, just look at if anyone has the time, go to the Congressional Budget Office's numbers, and the latest forecast you'll see, the official forecast that they do for the budget going forward for the next 10 years, is from January 2025. So in January 2025, they made their forecast for the next 10 years, and this shows the debt to GDP ratio rising. What that means is the national debt will rise at a faster pace than the gross domestic product, or faster than the economy. So it's a bit like a family, your salary is rising by 1 or 2% a year, but your credit card debt is rising by 10 or 20% a year. It's just getting bigger and bigger. And there comes a point where it becomes completely unsustainable. So when you look at the CBO's forecast as it was in January, it showed the debt to GDP ratio rising from, let's call it for simplicity, 100% to 150%. I mean, those aren't precise numbers, but it's a huge rise over the next 10 plus years. And a number of the numbers they've got in there are fairly conservative. When I say conservative, that they're conservative in terms of this is the best case scenario. They expect there should be no recessions, no natural disasters, no wars, no pandemics, no crises, no unemployment, rise in unemployment. Nothing. There's going to be nothing which will tilt the figures negatively. So if we would have, for example, another pandemic, of course, tax receipts will go down and spending will have to go up. If there's a natural disaster, same thing. If there's a war, same thing. So the assumption is there'll be none of those. And the other assumption which is being made, which I find rather adventurous, is the assumption that the interest rates that the government will pay on its national debt will be about 2.8%, rising to about 3.3% in a decade. Yet the cheapest interest rate you could get as a government now, the US government, is about 4.4%. So if you factor in these higher interest rates, that debt to GDP ratio accelerates at a faster rate than the government's was predicting in January. And of course, they have said if this tax bill goes through, they'll have to revise the figures again. And it's going to add, and I've done the maths on this, it's going to add really $500 billion a year to the deficit, which should this year, which ends in September, this is the fiscal year, should be 2.1 trillion this fiscal year. That's going to go up to 2.6 trillion deficit. What does that mean? It means the debt gets bigger by 2.6 trillion. How much is that as a percentage? Well, if you take the debt at 36 trillion, I think that some of that's debt owed by the government to itself internally. If you take it 30 trillion, it goes up by 2-point-something trillion. Well, that's about 7-8% increase in the debt in the year. Now, the economy isn't growing that fast. The economy is growing by 1 or 2%, if at all.
Retail investors are waking up, and they're charging into the silver market with a vengeance. For years, the silver narrative was dominated by institutions and industrial users, but now the small investors stepping in, and they're not nibbling. They're buying every ounce they can get their hands on. Bullion dealers are reporting record sales, delivery delays, and surging premiums across the board. 1 kilo bars, 100-ounce bricks, even government-minted coins. They're flying off the shelves. And this time, it's not a Reddit meme or a social media campaign. It's raw, grassroots fear. People are watching their savings get destroyed by inflation. They're seeing banks fail, debt ceilings explode, and central banks lose credibility. They're realizing that if they keep holding fiat, they're going to be left with worthless paper. And so they're doing what institutions have done quietly for years. They're buying physical silver. Only this time it's happening in full view of the public. And here's what makes it even more explosive. The retail crowd moves fast. Unlike large institutions, retail investors don't wait for reports or committee meetings. They see a threat and they act. And that action is pushing demand through the roof. Even silver ETFs, which had seen stagnant inflows for years, are now recording aggressive accumulation. Mining stocks, especially juniors and explorers, are catching bids again as investors chase leverage on silver's upside. But most important of all, retail investors don't just buy, they evangelize. They talk, they post, they share their stories. And that creates a wave of awareness that spreads far beyond financial circles. The more people realize silver is both scarce and essential, the more they want to own it. And unlike Wall Street, the retail crowd doesn't trust paper. They want the real thing, physical metal in their hands, out of the system. This creates a feedback loop. Rising demand tightens supply, higher prices draw in more buyers, and scarcity becomes self-fulfilling. And once enough retail investors flood the market, the big institutions are forced to follow, not because they want to, but because the momentum becomes too powerful to ignore. When that happens, silver doesn't just rally, it ignites.
Unlike previous bull runs, the last one being from 2000 to 2010, which lasted a decade, I think this one probably has no ending until we have a new monetary system. So I think this is the final run, but it's not a final run with where you can say it will hit a certain price. It keeps going until we don't have the currency which we use to buy gold anymore. And that effectively means that if you ask what the price will be, you'll be asking what the price will be in what will become eventually a defunct currency. Now, how long that takes to happen, I can't tell you, but I think I've been saying to people we're at 5 minutes to midnight, and now people are starting to say to me, well, Clive, I used to tell you you're a fool because it's not going to happen at all. Now I'm telling you you're a fool because we passed the 5 minutes. It's 2 minutes to midnight. So we're definitely getting closer, and we don't know what will trigger it, but if you have a loss of confidence in the currency, what happens? People rush down to the shops to buy anything which will hold its value in the long run. And that doesn't matter whether it's bottles of whiskey or toilet paper or soap or toothpaste. I mean, I was not going to buy things which will expire, but you might, if you start to see a feeling that we're near the end is nigh, that's what people do. They always do. They always go down to the shops and buy everything they can lay their hands on in the hope of preserving their buying power as the currency fails. But, from another point of view, I'd just like to point out the man in the street, I think he's going to be just fine. Because if we have some sort of currency reset, there will be a replacement currency of some sort. And if there is a replacement currency, the small guy will be seen all right. He'll be allowed to have a certain amount of his old currency moved over to the new currency, and therefore he probably won't notice a difference. But if you're relatively well off with some savings, with a pension pot, with some bonds, you might find that you can only convert, I mean, when I say might, I think it's a certainty, you'll only be able to convert some of those savings, and only under certain circumstances, to the new currency. We don't know what those circumstances will be, but there's examples when East Germany merged with West Germany. Only some of your East German marks could be changed into the West German marks. So that was a currency reset in a certain sense. If we do have another one, it won't be the same. We don't know what form it will take. But we do know one thing from history: when these currency failures happen, the losers are always those who own financial assets in the form of the old money, whether that be bonds or bank deposits or loans to their family or their friends or their or businesses. Anyone who's owed money, and money terms, it will be owed money which is now has no value, or has little value, or limited convertibility. So I think what I'd say to people is, if you want to get to the other side, and if we don't know if it'll be a gold-backed currency, it might be, but if it is, if you go in now with a gold coin, and you'll come out the other side with a gold coin, you'll still own the gold. If you go in with cash, you'll come out the other side owning a different currency and whatever you've been allowed to convert, which won't be much.
There's a hidden force behind silver's surge that almost no one is talking about: its strategic role in energy warfare and technological dominance. As the world fractures into geopolitical blocks, the fight for resource control is intensifying. And while oil and rare earths dominate headlines, silver has quietly become one of the most critical and contested elements on the planet. Why? Because silver isn't just used in solar panels or smartphones. It's essential to modern defense systems, aerospace technology, and high-frequency energy weapons that are redefining modern conflict. Think about what that means. Every advanced missile system, every directed energy weapon, every hypersonic drone requires high-grade electronics, heat dissipation, and signal fidelity. And at the core of that performance is silver. The US, China, and Russia are all racing to build out next-generation defense platforms, and silver is embedded in every layer of that infrastructure. When war games become real and production ramps up, silver demand won't just rise. It will spike violently, because no military can afford to run out of a metal that enables precision weapons, secure communications, and energy efficiency on the battlefield. But it goes even deeper. Energy dominance is the new battleground. Nations are now competing not just for fossil fuels, but for control of green infrastructure, solar grids, EV production, AI-driven power systems. And guess what ties it all together? Silver. It's not just an industrial input anymore, it's a geopolitical lever. Those who control the flow of silver will increasingly control the pace of technological advancement. And this reality is finally starting to hit investors. As tensions escalate, as sanctions tighten, and as resource nationalism rises, countries are beginning to prioritize domestic access to strategic materials. That means less silver will make it to the open market. More will be locked away, allocated to national interests, or used in closed-loop supply chains. The result? A global scramble for available ounces. Once the market realizes that silver isn't just a monetary metal or an industrial workhorse, but a strategic asset in the age of high-tech warfare and energy control, the repricing will be swift and brutal. Because when a commodity becomes essential to both survival and supremacy, there's no ceiling on demand.
They just happen to think it's a good idea all by themselves to buy government bonds to stop the rate rising. That's when they start printing and buying government bonds. And that's what they did in the 2008 financial crisis. And miraculously, it happened without any great impact on the rate of inflation. They did it again during the COVID pandemic. And again, it looks like there was no impact on the rate of inflation, except there was for those people who are planning to spend money in their retirement. Because those people who want to spend money in their retirement, the savings for their retirement, the things they need to buy in their retirement have been rising much faster in price than the CPI. And I'm talking about things like nursing home care, things like a nice home with a snooty drive, or a centre of town apartment near to the shops. I'm talking about the school fees for the grandchildren. Just about the lovely things, the paintings on your wall, the nice things to have, which are in limited supply, Those are the things which are rising in price. And of course, the other area, or the main area where all this surplus money has gone, has not been into the consumer price index, which has been suppressed by the fact that most things you buy are made by robots, not by humans. So the rising labor cost isn't hitting your prices very much. Most of what that money, which has been borrowed by the government and spent, has ended up finding its way into asset prices, home prices, equity prices, Bitcoin, gold, silver, now platinum maybe, and other assets, like if you go to some of the auction sales and see the price of a rare painting by Leonardo da Vinci or something, I'm sure these things would be going for hundreds of millions of dollars, because there's only one of them, and there's going to be at least two people with that much money who want it.
The stage is set for the most violent short squeeze the silver market has ever seen. For over a decade, major banks and institutional players have used the paper market to suppress silver prices, flooding the COMEX with futures contracts, spoofing trades, and selling metal they never owned. But that scheme is starting to unravel. Why? Because the physical market is saying no more. Delivery requests are surging, inventories are vanishing, and the price divergence between paper and physical silver is widening by the day. The illusion of unlimited supply is breaking down, and when it shatters completely, the fallout will be historic. This isn't just theory, it's math. The amount of paper silver floating around, contracts, ETFs, unallocated accounts, outnumbers the available physical metal by a staggering margin. By some estimates, there are hundreds of ounces of paper claims for every real ounce of silver in storage. That works when no one demands delivery. But now, with trust in the system evaporating, investors are starting to say, I want my metal. And that's where the trap springs shut. Because if even a fraction of those paper holders request physical delivery, the system can't deliver. COMEX vaults are already being drained. LBMA stockpiles are falling. Refiners are backed up and premiums are spiking. The moment a default becomes even remotely possible, panic sets in. And panic in a market this thin creates parabolic price action. It's not just a supply and demand issue, it's a credibility crisis. When the market loses faith in paper silver, the scramble for physical begins, and the price gets repriced in real time. And here's what makes it even more dangerous. The short sellers aren't just on traders, they're some of the biggest financial institutions in the world. If they get caught offside in a runaway squeeze, they'll be forced to cover at any price. That means a buying frenzy not driven by interest, but by desperation. Add to that the crowd of retail investors piling in, the funds chasing momentum, and the industrial users suddenly realizing their supply is at risk, and you have the recipe for a supernova. This isn't just possible, it's becoming probable. And when the squeeze hits, it won't be gradual. It will be instant, chaotic, and unstoppable. Silver won't just rise. It will explode through resistance levels, shatter price targets, and rewrite the rules of the game.
As you mentioned, the last week or two, a few weeks I've written a few days ago about the silver price, and then a few weeks before that on the platinum price. But I constantly write articles, whether it be stories about the Federal Reserve being insolvent or what the stock market is going to do. I've also got my own YouTube channel, which you probably didn't know. I just started up about a month ago. It's struggling a little bit, but basically I'm teaching people how to make a lot of money in equities. I've been investing money for 50 odd years in equities. I've proven on LinkedIn by publishing my portfolios every year, which every year beat the benchmark. So I've proven that I don't make as many mistakes as I used to. And now I'm teaching people about my ideas about how to buy good investments on the stock market on my own YouTube channel. So if people look for my name on YouTube, hopefully they'll find me. The videos I've done are a bit all over the place, ranging from how to pick stocks which are beneficiaries of artificial intelligence, how to find low-value, cheap stocks or value stocks, how to invest for dividend investing, and so forth. So have a look, and if anyone's nice enough to subscribe or watch it, I'd be really grateful.
Everything we've covered, every chart, every trend, every signal, points to one conclusion. The fiat system is dying, and silver is being revalued in real time. The dollar is on life support, debt is spiraling, trust in institutions is collapsing, and the world is preparing for a new monetary era, one built on hard assets, not hollow promises. Gold is leading the charge, but silver is about to steal the show. Because when the reset comes, and it is coming, silver won't just be an investment. It'll be a necessity. We've already seen the setup. price breaking multi-year highs, physical shortages worsening, central banks signaling the end of fiat, and both institutional and retail investors flooding into the metal. But this isn't the top, it's the start. A $37 silver price isn't a climax, it's a spark. Because when fiat trust breaks entirely and people flee paper for something real, silver's true value will emerge. Not $50, not $100, but potentially $1,000 or more, as the market finally recognizes what silver really is: honest money. So the question is, are you prepared, or will you be left holding paper while others hold history? Don't wait for the mainstream to confirm what you already see happening. Trust your eyes, trust the data. And most of all, trust that once silver starts running, it doesn't stop until the system resets. Make sure you subscribe to stay ahead of the curve as this financial transformation unfolds. And remember, this is not financial advice. Always consult with a licensed professional before making any investment decisions.